All right, we are live. Hello and welcome to the Business Octopus, where we talk about all things sales, marketing, and technology. Today, I'm joined by LaSean Smith from the US. How you going?
I'm great. How you doing, Avon?
Not too bad, not too bad at all. So let me just take that one off there. Cool. So I am Avon CRM and marketing automation specialist at Relevate. And LaSean, you've worked in the investment space. You've done a lot with tech. You've got an investment portfolio and a company called CAGR.com. Yeah, tell us a little bit about that. That sounds really interesting.
Yeah, well, my background is software, kind of the intersection of media and software. So most of the software products I've built have had some type of media, video, or other type of angle to it. And over the years, I just kind of kept seeing these patterns where there were either companies undervalued or there were folks who were really just kind of positioning an interesting piece of target or tech at the wrong market, and really kind of looking at that as an opportunity. About a year ago, I shifted from investing on the side to investing full time, and it's been a fantastic kind of initial year, because when I've done probably about a little over 30 angel investments, and I had done other side investments on the private side in the past, and so I don't know what that number totals up to, but probably 40 some odd checks cut, and that means that's a lot of people you talk to get to that number of yeses. And what I realized was, if you're not trying to deploy capital too quickly, there's a lot of great deals out there, but you can learn so much around what works and what doesn't work for a business. And typically, and maybe this is what we can focus on today. I find that it's usually not the product that's broken, right? Like if the product's not good or the team's not good, you're going to suss that out quickly, many times minutes into a conversation. What typically is broken is, the operators have either picked the wrong market or they have the wrong go-to-market plan. And a lot of that can be fixed with the right process. But so many times people think, oh, I need to add another feature, or I need to work with engineering or design to change the way this looks. And many times it's how are you engaging? What are your go-to-market activities? And are you actually focused on the customer that matters? So what I spend my time doing, nowadays is trying to learn as much as possible in areas that can be impacted or improved with automation of some sort. And if so, then I kind of dive into a traditional buying process. We can maybe talk about that later on. But the real goal is to find those opportunities where structurally the product is sound, but the go-to-market and potentially the market positioning is in need of some tuning.
So, as a process engineer, you're a fan of things that I really like to do and implement in business, which is that automation side. So I guess we'll jump into a little bit more in this in depth in a second. But in terms of automation, like, is there people always, it's a bit of a buzzword, and everybody goes, oh, well, there's a platform or there's a tool, or there's AI. Where's the separation between like getting it conceptually right and then just finding the shiny app or plug in or something to use?
Well, there's definitely an order of operations. That's the way I like to look at it, where the beauty of AI is it's forcing people to think process first. And if you go way back into, kind of the 1950s, where this got popularized, there would be these consultants that would go into a manufacturing plant and they would do these process studies, and they'd have like a clipboard and a little stopwatch, and they'd be calculating, this is how long it takes to make X, number of Coca-Cola bottles, or something to that extent. And they would find all these inefficiencies. It's like, oh, if you put a person right here, or you change the way this angle is, and they'd find all these seconds to shave off, and then that would increase the throughput, and that's how they would justify their consulting fees. Now, once we get to the 80s and the 90s, a lot of that falls out of popularity. People don't know that type of work is happening. And what do? We start solving these things with knowledge workers, and we try to digitize as much as the paper process. Like, all of that is requisite. What I love about this current wave of AI kind of crossing into a broader audience is people are like, oh, I probably need to get my process sorted out before I go figure out what I'm going to automate or where I'm going to outsource to some AI workforce. And so all those old school frameworks, like this is decades of research that we don't have
Mm,
to reinvent. And like I really love that so much of that is already proven because
mm,
it's how we manufacture cars and like things that have like real safety risks, right? And so,
mm,
the SaaS company that I own is probably, much lower stakes than a vehicle on the road.
yeah.
And so I love to look at all that history and then say, all right, what does that tell us? It says, number one, you need to define your process. And anyone who can't articulate their key processes like very, very concisely, if not off the top of their head, by pointing someone to kind of a single page document, like
Mm,
that is the first sign that there's some process optimization that can be put in place. And then I also find for early stage businesses, let's say you're, I'm in the software space, so many times we'll talk about annual recurring revenue, but regardless of your your industry, let's say you're at $4 or $5 million a business. If somebody says they're doing 5 million, I'm going to use U.S. terms here for this
fine.
conversation, but
Yeah.
if somebody says they're doing $5 million worth of business and then they tell me that they got all these processes, I'm like, time out. Like that sounds like crazy talk.
Mm,
If you have multiple product lines, you start breaking into 8 digits of revenue, like maybe you can start having this conversation. But if you're in single seven, you're doing 7 digit, numbers, you should be as close to one process as possible for sales, delivery, and support. Now, yes, there's going to be all these little kind of workflows that get stubbed off, but the more folks kind of look at this flow and say, "Oh, but you don't understand my industry. I need to do XYZ." And I'm like, "You're playing the game on hard mode." And so I really love kind of starting with process documentation. You don't have to, there's software companies that will help you document your process. You don't even need to do all that. You just go open a Google Sheet or a Word doc and you go type this stuff out. And then kind of the punchline to your question is once you
mm,
have a good understanding of what that is, you should be able to put targets and metrics. When I say target, some type of measurable data point that has a target value to it that says next week, next month, next quarter, we expect this metric at this part of the process to be at whatever value. And then it becomes very easy through that lens to go and look at whatever is in the AI news and say, does this particular company help solve this metric? And so that way you're not trying to figure out like, oh, what does this new, company mean to my business? No, no, no. What does this company mean to this task at this step in your workflow that
mm.
encompasses your process?
Yeah, I like using it like a numbered dot point list. Like it's so simple, it's
Yes.
ridiculous.
Yeah. And if you
And
get too
then
many nested pieces in there, you're also probably doing something wrong where you're overcomplicating it.
or sometimes even just doing less. Like I remember I did a review of one company and they had like at the end of like a 38 step process was like signing the purple book. I'm like, where is it? Why do we do that? Who
Yeah.
signs? What's the outcome of that? Like you could just cut that process off altogether. So I think in terms of process design, some of the concepts like the old world concepts like the can die, they don't go away. So
Yeah.
we've got a Toya Glenn here saying yes to automation. Hello Toya, thanks for watching.
Howdy.
So why don't we jump into our actual questions, the one we talked about before, and go through how do you truly identify your ideal target market?
Yeah. Well, first thing I'll kick off with is so many times when I see a business that maybe someone's early stage and it's more of a it's a VC path and they're looking for me to take a minority stake, or it's more private equity and they're looking to sell the business. In both cases, um, I don't love to do turnarounds. There's some folks who that's their whole thing. They want to turn around a failing business and they're going to do what's called forced appreciation. They're going to figure out how to add more value to that business. I'm looking for folks who are just emotionally or from an age stage kind of ready to get out of the business, or they've been doing something and it's flat, whatever, however they've been running that business and it's flat, but it's not broken. And I give that as an asterisk because many times I see businesses where someone has built the product And it could be fascinating. It could be technically accurate, or it could be well crafted, or it could be, I've seen some direct to consumer DTC products that are just amazing. I've seen agencies where, like, their visual designs are like so fantastic. But then I'm like, all right, tell me how you sell this product, and
Mm.
who do you sell it to? And that's where it all breaks down. And so the reason I start with that as an asterisk is I'm always looking to define the market, then go validate your go-to-market, and then go figure out how you improve, delivery if it's a service business, or
Mm.
product if it's product. So with that context, let's start with what is a market. I look at a very simple definition that I go back to, which is a market is a group of individuals who share a recurring, urgent, and painful problem, and have the willingness to pay to solve it. Right. And so what I'm attempting to do in any business that I'm either advising or supporting, I'm trying to figure out, all right, what work did you go do to actually go validate this? And, in the Lean Startup, this is a book that's, I don't know, over 10 years old now. Many folks know that, tried and true pieces. And really, that's a book about iterative development and iterating your way to finding success, right? And so for folks who are not familiar with that book, it really talks about, a different way to build a company. But more fundamentally, there in that first section, it talks about customer development. And customer development is the process of figuring out if you've built something people want to pay for. And it's easy, especially in low capex businesses. So businesses that don't need a lot of capital to start, where maybe it's a service business. It's easy to kind of just get going and like not have a ton of process, and pick the market. And we're going to go back to that definition I just had. Pick a market that is going to pay you less for the same work, where you could just kind of like point it 45 degrees in a different direction, and now you're going to be able to do the exact same work at 2x the price, right? And so so that's the structure. The actual execution through this process starts with what I call 100 conversations. And so I want everybody to go and talk to at least 100 people. You can frame them as conversations, discussions, interviews, whatever is appropriate for your customer target. But the goal is to get yourself uncomfortable, because here's what's going to happen. Let's say you run a web development agency, or that's what you aspire to go and start. It's pretty easy to go get a domain, form the company. Like, you could do all the transactional stuff. You're like, I'm in business. And it's like, okay, but there's all sorts of people who do that type of service. Like, do you have you probably heard this term, problem story fit? Like, are you telling the right story? Well, you can't tell the right story if you don't know who your market is, right? Because you don't know what their pain point is. And so the purpose of these 100 conversations is to first get through your friends and family list, because somewhere around, conversation 17, 23, some point, you're going to get stuck. You're like, who should I call next? So the obvious thing is, like, when you have a conversation, use it as an opportunity to say, are there two people you could recommend? And so that helps the spider web, right? But what you're trying to have in these conversations is not, do you want to, if we use this web development agency example, do you want, web development agency services? It's talking about, what are your pain points? Like, what's top of mind? There's the biggest pain point, and then hopefully that leads to a conversation where you're not leading the witness, and you're really having a conversation like, what's the most broken in this person's brain or their business, where they're just like, if I don't solve this, I don't know if this whole thing works out. And these can be short 15-minute conversations. They can be as long as 45, 60 minutes, but they need to have some type of time box, because, another important thing I believe is, you don't pay a marketing agency or someone to go facilitate this for you. You need to go hunt and get somebody to commit to talk to you for free. The other thing this does is, once it gets you out of that initial wave of people, now you're at, person, 37, 43. You really have to get good at your messaging, because now you're doing the equivalent of, cold outbound, right? Because you're just like, I got to get these people to pay attention to me. Like, who are you? Why should I listen to you? And then around 50 or 60, and this is like almost every time, this is fascinating. If you're honest with yourself in the process, the thing you thought you were going to build in conversation 5 and conversation 65, it's just different. And so this piece of the process gets skipped so many times. And then what happens is, because people don't do it up front, they have all these proxy activities that they try to insert later in the process that are way more expensive. And
Mm.
it's just it's a huge struggle, I think, for folks to mentally really believe that like that needs to be step 0. And throughout this process, what I really love that you get as a byproduct. So let's say you get to 100. I actually use for myself 120. So because I always find like, have a little extra and I'll get some extra anecdotes. But whatever your number is, I think 100 is the min bar.
Mm.
Once you finish these, hopefully you've documented them and properly. It can be as simple as a spreadsheet or some type of CRM, but this also becomes the base. So you don't have those conversations, say, thanks for the time, never talk to them again. You should figure out what's the appropriate cadence for your industry and the relationships to follow up. They don't want to be bombarded just like, all these things, but people love it when they say, Jessica, thanks for that call 3 weeks ago. I've taken that to heart. I'm incorporating that into this new business I'm developing. Here are the early results. Would love to see if you wanted to try this for free for 2 weeks or a month or what have you, right? And the next step there is kind of obvious, right? You now turn these people into your early potential funnel. And I love this thing called a dollar contract. I want to go back to that list of 100 conversations and I go ask them, hey, again, thank you for this. You shape what this product or this service has become. I'd love to give you this service for $1. Again, if it's a service based and it has some real costs, you just kind of time box it to kind of keep it manageable. If it's physical product, there's all sorts of ways where you can do this, but legit $1. And it's not free though. You don't say I give it to you for free because you want to test, like, do they have to ACH the money? Do they have to send it over a Stripe or Paddle or whatever it is? Like, you got to figure out, like, test this whole thing out. And for your first 5 to 10 customers, it's $1. And, people are like, well, I can't just be selling my stuff for $1. Like, well, you have no examples that this works. And so, so those first 5 to 10 become your base. And I'm kind of underscoring this piece because I hear folks sometimes say, oh, my system's working, I just need to optimize it. And then people are like, how do I even get going here? Right. Like how do I get the ball rolling? And so once you have that, now you have those folks, and then you just ramp up your pricing 25, 50, 75. And then once you're at about 20 customers, you're back at your rate card. But now you have this deep bench that serves as another piece, which it's your social proof, right? So now your salespeople have this collateral, or it's just like, it is very easy to understand, like that this thing works because look at all the people lined up here that say this is great. And so that's kind of the journey through that process. 2 other quick things to talk about through that is at the end of that, and I think this is requisite for whoever is in control or responsible for outbound. It might be the CEO, it might be head of sales, it might be the CMO, whoever is responsible for kind of overall messaging and the story of the company. You should go take those conversations. And again, you're trying to be honest with yourself. Those are going to shape whatever is going to become your product or your solution. And then instead of writing a internal PowerPoint document that says, here's the summary of these results, you write a manifesto that is going to be intentionally public facing, that takes that whole journey, and you write that in a narrative. And this could be as short as 2 pages. It could be as big as, maybe a dozen pages, but, it's not gonna be super long, but there's enough meat in here where it's really valuable. And you're going to be honest, and you're going to say, this is why we're in business. This is what we learned along the way. This is what we thought we were going to do. We got inspired by customers, and now we think this is the problem to solve. And by the way, here's, like, at the very end, like, here's the thing that we're going to make. But the bulk of it is, here's this unique insight that we've discovered on something that's broken in the market. And you're writing it through the lens of someone who's reading this is like, oh, I have that problem. Oh my goodness. Like, yeah, like that happened to me. And this becomes the basis of so many other marketing assets. So now you're not guessing, this is rooted in real customer feedback. And this becomes the artifact you use to write ad copy, to create your email drip, to do your any of your outbound email outreach. Your call scripts, like all of this stuff is like rooted in this summary from these 100 humans, and it's just so powerful because this is so cheap. And even if you're not a great writer, you could hire an agency or somebody to help you kind of pull this together. But the goal is to really share this in public. And for folks who have a more of a low touch sales funnel, they can also use this as a lead magnet to then book calls or other types of activities. And so there's just a lot of goodness that you can get out of this artifact. So that's the super high level of this process. A couple other quick tactical things that I've done in the past is once you have the manifesto, you can also go run fake landing pages and fake ads under a different brand. And so this is something I see when companies get a little larger. So let's say someone's like, hey, LaSean, like Lightwork, like we're way past that. We're at like 15 million ARR or whatever the number is. If you don't have this, you should go figure out, what your team should go do to kind of create this, because a manifesto is a living document. You're allowed to, kind of shift and change this over time. But if you have zero document, it's something that, folks may want to go create. But regardless of when you created the document, once it exists, something I've tried that's been very effective is if you're afraid to go try a new landing page or try a new ad, something that you can get feedback, near instantly, in hours or days of running some type of campaign. You just go create a secondary brand name and go get real data. And the goal is never to use any of these reactions, but you're trying to figure out, does this copy work? And so if you're in an organization or you're the steward of a brand and you're like, I don't want to break this, there's paid ads or something that's just a true lever, right? It's not like, you wouldn't do this with organic or content marketing or something that has a very long lead time and has a high kind of trust barrier, where like that would be silly to do. But you get so much goodness because instantly you're like, all right, I'm basically A/B testing this ad copy based on my manifesto, and it's zero risk because there's no product at the end of this. You could route it to a competitor, do whatever you want to do. And so I love these types of tactics because it removes the excuses we have where it's like, no, we need to move more slowly because we don't want to damage the brand. Don't worry about the brand. Make sure your funnel works. So anyway, that's the high level. And I really believe that if you can get smart with the customer development process, it sets up everything else to succeed. And it's going to give people in the team more permission to move and kind of, automate things, optimize things through this same lens. It almost is, becomes, the true definition of a manifesto, like the reason each team member says, this is why I'm here.
Yeah, there's a lot to go through there. So I've made some notes. But just to Toya's point here about the $1 thing, I think that was good, particularly from, it's one, you need like a non-threatening way to try and get people to meet with you and talk with you. So getting market feedback is a great lead generator. And then the $1 thing, like when people put their money where their mouth is, you'll quickly find out who's not going to do that. So if people go, yes, 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 and they're very agreeable and they give you all thumbs up and all the smiles in the world, and then the moment you walk away, they're like, no.
There you go. And quick sidebar on the $1. Another reason this is very important is if you're selling a higher ticket kind of enterprise sell or something that has multiple stakeholders in a company, many times the procurement process or something else is going to be a headache. But then people don't want to really give you the real reasons, like we don't have enough budget or there's some other reason. It all slows down. And then like you're looking at your pipeline, you're like, I thought pipeline was healthy. And like, oh my goodness, like where did all these prospects go? When you use the $1, and again, you're only going to use this for your first, very early stages, not just of a new company, but also of a new product, right? So it's not just about like, well, we're already in business. You can use this for expansion as well. But when you do the $1, it forces them to push you through the procurement system. So another kind of side hack is you go find something that has crazy value beyond $1. So there is no conversation on budget is the issue. There is no conversation, is this valuable? But many times you can use it as a wedge to get into that account. Like this is super valuable because now the accounting team, procurement team, legal, whoever has to go look at your contracts, they've had to go through this whole process.
Yep.
And now when you're like, hey, I got this thing for $15,000, there's so fewer people involved in the conversation at that point because you've already kind of checked off all of their internal process buckets.
Yeah, I think one that's a pretty clever idea. I've seen it before where you get like coaches and consultants and things like, and they say it's $50, but only $1 today, and then the rest will get charged in 30 days time or something like that, or
Exactly.
or just before the session, so you've got time to cancel. So there's a commitment psychology, and then there's the obviously the procurement side, which is I don't think most people think of. One of the other things you mentioned, in addition to the $1, you can probably even ask for a Google review, which is to your point about social posts, social proof, because I think third-party evidence is much better than you saying, I can help people and I, get an outcome for you. But if someone else says, oh, this person helped me, it was amazing, 10,000 times better. So
100%. And there are a couple quick things there. I've been looking, we start off, talking about what I do in my day job. I've been looking for a company that does testimonials. One of the popular kind of for the smaller market is a company called testimonial.to. And it's, I love that story because it's a solopreneur who, he's a coder. And I think now he has 2 or 3 people helping him out. His business isn't for sale, unfortunately, but what I love about that business category, and there's others in the space, but just a shout out to folks who have kind of solved this problem really well with a really clean solution. What their platform does is, or his platform does is, you can collect video testimonials, and then you can embed these all over the place. You can put them in email drips. You can put them on a video wall on your site. You can use them, kind of below a VSL, a video sales letter. Like you can do all these different techniques with them, but also they allow you to pull written comments from other platforms. And so if you're on, X or LinkedIn or what have you, they can actually pull. And the beauty there is like you can click through. Right. And when you click through to that LinkedIn, now you're actually on this person's LinkedIn. So there's this additional level of credibility. Like this isn't just some random name and an avatar that someone grabbed. You can actually click through and see who left this comment. And it's so powerful. Again, especially for folks who have a high consideration product, you can just short the line and say, oh, here's a dozen people who have already kind of seeing this. And when I've looked at the analytics on these things, people don't usually get past the 3rd or 4th video. Like psychologically, they're like, okay, I get it. And so, it's just a very, very powerful tool. And I'm surprised that there aren't more people in this space. And this is one of the reasons that I'm very interested in social proof as a key enabler in the sales pipeline. But however you solve it, you could roll your own solution here. You don't need to buy anything from someone. But that social proof is very valuable. And last thing I'll say about that is this has been around for decades. Like what people used to do is they would go find their best customers and they would send a video crew and they do a talking head video. And it was just so expensive. But now you can just do this with a webcam or your phone. And I would argue the low quality, authentic hold the phone is actually more valuable than the highly polished, well-lit talking head video. And so I love that the psychology has remained the same, but we found a much more economic way to pay it off.
Yeah, I definitely I get everybody just to hold like in landscape mode and then shoot their themselves, and then I whack it on YouTube, and then I can post it on landing pages, in emails, like, and there's also value on it just being on your social channels. So there's a lot of power, and then you get all the read metrics and analytics and things like that from how many times people have viewed that piece. So it just gets more and more powerful. Toya's also commented, writing a manifesto while we're in business, what we thought we were going to do. This is not what we learned along the journey. This will help with marketing, rooted in the summary from the 100 folks. So yeah, absolutely. The being able to write that manifesto gives clarity, and the fact that it's public, I think, is a great idea. I think a lot of times people want to have this polished vision of what their brand ultimately is, but the harsh realities of, hey, we had to stumble along on the early days to make stuff happen so that we could be a big polished business. I think sometimes people are okay with you being human, or even with your brand being human, and it has faults. It started. It had to learn to crawl before it could walk, and then learning to run. that part of that story is actually cool. Like if you've ever read Tony Hish, it's the shoe brand. I forget what its
Zappos.
name. Zappos, that's the one. So we went there. Rest in peace, Tony. We went to the office and checked out, and you're like, everyone's got their own desk. There's all this like stuff hanging from the ceilings, confetti, and they have parades. And I think someone had a birthday party, and there was cake, and someone wore a crown, and like just some crazy stuff. But they build up to that because they created a movement, and it wasn't always perfect. Sometimes they're on a sales call, and the people can hear over the phone, oh, there's just a parade going on because it's someone's birthday, and that's noise that would seem like bad customer service, but the customer gets on board and they think it's fun and exciting too. So involving people is always a great idea.
Yeah, bingo. And the last thing I'll say on that is beyond that initial work, this is something when I was working in big tech that we use quite often, is to leverage some of those folks to form a customer council. And so, having good customer signal can keep folks engaged. It can actually obviously make the product better. So, if you're partnering with other folks in your company on the actual product or the service, that's great. But having a small council, so if you're a smaller business, maybe it's only 8 to 12 people. If you're a mid-sized business, you might have a few dozen. But the power of these councils is that they stay engaged. Now they're part of this journey. Now they're rooting for you. And so if you do get a bad piece of press, or you do get a poor review, or you do get all these things, you have folks who can go and kind of root for you because they see the whole story. Just tying this to what's done sometimes in B2C, one of the things I learned early in the process when I start working with larger creators and things, I was like, how are you guys hacking this? Like, as soon as you drop this video, this thing goes. And they're like, oh yeah, we just have this group of folks and we drop the link in the Slack, and we make sure they watch the whole thing through. All right. And then when they post their video, they drop in the Slack and we make sure we watch the whole thing through. And there's enough geo coverage, and it's a real watch. It's not a bot farm or anything like that. That it gives it enough bump to start getting recommended. Now, if the video is not good, the video is not going to continue to perform. But that's an example of a super, super tactical way to activate some type of customer council, is that you can have them go take some action in concert to go drive, some forcing function on a platform you don't necessarily control.
And yeah, like numbers beget numbers. So like we have this herd mentality of where you see one person, then you see two, then you have an early majority, and then you have the main body, and then it starts to peter off. But that concept happens literally on everything. And there's a few tried and tested concepts. Like we talked about, I have a concept of everything as a pipeline. So whether that's ideas, whether that's processes, or whether that's changes to systems or whatever, the same is like your content that you're putting out there. And in terms of like numbers begetting numbers, there was a guy did a TED talk, and he's at a concert, and he's filmed this one person that's dancing. Everybody else is sitting down. This one person's like going nuts on the grass, and for like a good 5 minutes, and one guy gets up, decides to join him. And then it's like another 30 seconds before there's like a 200-person crowd.
Oh, I love it.
Dancing along, because one person decided to join, and now there was a trend and a crowd. And then, like what you're saying, but with content, that snowball effect, it happens, is a real thing. So
yeah,
I think it's really good.
Often. Yeah, there was this old saying back in the day where no one got fired for buying IBM. And the reason behind that saying was, at the time, even if it wasn't the best, it was socially accepted across professional circles and industries that if that was the deployment, you at least wouldn't get fired. And, for better or worse, a lot of these behavioral nudges that we're attempting during a marketing or sales cycle has to do with psychology. And it doesn't matter if the person's a CXO, like, they're still a human. And so, one of the things that I love, I had some time working in consumer apps and games. The same techniques that you can use making a game or a consumer app, they work on enterprise customers as well, because we're all just humans.
There's, I don't know if you've heard much about Australian news recently, but that same concept of no one gets fired for hiring X was for one of the major consulting firms, PwC, and they got in trouble because they kind of played both sides with some tax legislation and now that's causing the government to question all of that. So I mean, IBM, it's more less implications. Yeah, it's probably not as fast or it's not as quick, but sometimes these concepts change, and like you say, the person buying is still a human. And one thing about buying statistics and procurement and things like that is that the average age of a procurement officer is going down. Like, it's probably about 35 now. So these are people that watch Facebook, listen to YouTube. They, they're motivated. They listen to podcasts. They want to do something different and new and kind of make their stamp. So sometimes you don't get that same old buying process. The process has changed because the people have changed.
Yeah,
so
totally.
Which kind of leads us in, I guess, we've covered a lot on that topic, so we should roll into the next one. How much can you automate or streamline your processes?
Yeah, so just quickly connecting it to that last point, everyone, at the leadership level, whether you're a small company and it's just, two co-founders, maybe you've gotten a couple dozen employees to kind of mid-size, like wherever you're at along that spectrum, if your revenue, as I say, is in single digit millions, you should have as close to a single process as possible. And when I say single process, I like to say sales, delivery, support. Yes, there's marketing and sales, and so I'm coupling those together. Yes, if you make a physical product, that's different than if you're in professional services. But ultimately, it's I kind of see most of the businesses that I have visibility kind of fall in those three buckets, and it kind of speaks to that old Peter Drucker quote. The management consultant, like the purpose of a business is to create and keep a customer. Period. And it's just very crisp, right? It means all these other ancillary side departments, like at a certain scale of humans, you might need them, right? Because that's how you get all the humans to get together. But really, you make it or you sell it. Like nothing else matters in the company. This is why, I think so often for early stage investments, you'll see venture capitalists say, we want somebody who is the subject matter expertise. In tech, it might be we want a technical co-founder, and we want somebody who's on the hook for sales, and that might mean selling to customers, recruiting employees, selling to investors. But selling and making is it, right? Everything else is noise. And so if you can force yourself to have great discipline, that it really can be that simple. If you have a great product, then it's a lot easier to start talking about how do you automate. And this is really important to underscore, because a lot of folks, as they say, they just don't have a good sandwich. Like the product is not good. And so they're doing all these marketing activities to go do this. And I think, that's the reason you see, more popularity around product-led growth and some of these other concepts. It's like, let's just make sure the product inherently is good enough, so when we put the sales engine on top of it, it just goes. But you can only do so much if the sandwich is, isn't good. But back to your question, once you have that process, for me, I'm super, super obsessive over what is the simplest thing that has the lowest calendar cost. And no brand, customer trust risk. I use a definition of trust. That's the ability for someone to predict your future behavior, right? And so, I don't look at trust as good or bad. It's just, if you establish the wrong trust with a customer, you may never get them back, in a financial capacity. And so, don't break the trust, and make sure, when I worked at a big company, we had this concept of a two-way door. And it was, decision that you could make, and then you could reverse it, and like, no big deal, right? And so I'm trying to find as many low calendar cost two-way doors as possible, and I am trying to run an experimentation engine, right? And so one of the things I've done, getting very tactical, is I had at a VA, and she was quite good, and so I was thinking she was going to become maybe my chief of staff, and I effectively said, hey, listen, what I'd like you to do is just go through all of our documentation. It wasn't a ton, but maybe a couple dozen pages, and just make a list of all the things that there might be a SaaS product for us to automate. And I'm thinking kind of autopilot when I'm using the word automate. I know for some folks, they're thinking this kind of trend of co-pilots where there's like maybe a chat pane or something on the side. No, I'm talking like remove the human, right? Maybe the human approves at the end, reviews at the end, routes at the end. So these are not standalone processes, but you're trying to get autonomous task completion. And so I just had to go through all of these pieces, and it was really interesting because, like, we were using the obvious, pieces, Otter for logging, meeting notes, Calendly for booking, like the no-brainer stuff. But what was happening is, like, we'd get off a call and we were like, hey, somebody send an email with this, or drop such and such in the Slack. And we're like, those were our friction points, right? Where somebody had to go move it to another system. And so we found a number of cases where it's just like, all right, we're going to move to, another system for all of our chat. So this all can be consolidated. And this might be sacrilegious to, some smaller companies, but we looked at it and we said, all right, we're going to move from Google Workspace to Microsoft 365, not because I think it's the best single product on any of those, but the core underlying data was so much easier to integrate that all the other hooks that we had in our system were streamlined. And so it took us maybe a month or so to like move to Teams, and like, even to this day, it's frustrating because I'm like, why does this thing work like this? But as soon as I get a report, or soon as something, like I see an automation trigger like pop up in Teams, I'm like, that's why we do it, right? Because there's just so much efficiency. And then, when we need to plug into a third party, they have enough extensibility. And so just getting like hyper practical, like that's a real world process that we went in. And I don't have all the companies I invest in, like I don't force them to go make that move, but that was a very easy win with like very trivial types of tasks. Now we're actually experimenting with some other things around support. We know that things like we've basically trained any of the companies I have that support is async. So there's no phone number that you can call. But then the question is, if you could do something that felt more real time, or something that did feel like it was a different modality, is that a better service level? And I don't know the answer, but one of the things we're experimenting with is a live IVR system that's just using LLMs in the background to go actually have a real conversation. And so we're playing around with some different APIs, and the goal is not to go like build that as a product and sell it. My assumption is somebody out there is going to go and like make that as a very cheap service for us to go and buy, but we're going to have the internal data to know, is that something that's good for us or not? And so that's kind of the last piece of this kind of process hack, is sometimes you go do a very low cost R&D test to figure out, all right, I don't know if you're familiar with man in the box, but it's this concept of an invention back in the 1800s where it's like this magical box that could talk. There's actually a guy inside, right? So for some of these, it's like, can you just go create that type of experiment to see if it's valuable? And then you just wait for the right vendor to come along to solve it. And we have maybe 3-4 of those types of scenarios that we're like just building a backlog that says like, all right, if somebody sells this for X dollars, like we are going to at least experiment and try to integrate this into our process. Throughout this whole piece, things can come and go, right? Because we're chasing these two-way doors. But anyway, those are, kind of diving into some like super tactical things. But as you can see, like, these are not expensive decisions. These are tens of dollars and, maybe single-digit hours of one of your employees' time to go figure out, does this kind of remove the human friction? Does this increase high judgment? And that's another thing, through this whole process. It's not just, we need to get rid of the humans. Like, why, right? Maybe you're labor constrained. Maybe it is high judgment and you need to get a higher precision when that comes through. Maybe it's a throughput issue and you don't have enough capacity at a certain time. So I think part of the process, that's what I was talking earlier about, your metrics and having targets against those metrics. If you have that, it's very easy to assess if a particular tool or vendor can solve that particular metric versus like, oh, here's this new thing that, generates voices that blah, blah, blah. Well, it's cool to chase, but if it doesn't map to a metric, it's probably something you can put on the back burner.
I'm always very bullish on what we can do to automate stuff. So, and that doesn't always mean buying the new shiny thing, and it sometimes means just using the things you've got, like Power Automate and Teams, like you said. Most people probably already have it. And on top of that, it's really hard to measure the outputs of a automation and the value of it sometimes. So like there is an element of, yes, we can count that, you know, the guy with the stopwatch that you were talking about before that can say, all right, this now takes us 8 seconds instead of 38 seconds. That's quantifiable, you know, but then you've got to multiply that by the number of times that you do that in a year. And that might change. It might start, you know, small, but as you scale up, that then becomes very significant. I like that, asynchronous support is definitely high value. And, you know, just imagine, you know, in Australia, you've got Woolworths, which is like our major uh, grocery store. And they do a lot of online orders, and they've got it now hooked into, I think they use SAP on the back end, but they've got it hooked in so that when you live chat and say, I didn't get my jar of mustard in my order, that you add your order number, it will look up the line item, it will refund the money, and no human touched it. Because even if it wasn't missing and you just happen to claim it, I think there's thresholds to say, like, if this person claims, you know, the most expensive item every
Exactly.
week, ban them. But, you know, you can easily, I think the profitability in that jar of mustard might have been like, you know, 18 cents or $1.80 or something like that. And so to have a human look at it, it's not even worth it. So just run the machine at it, and then, you know, have your tolerance levels, and then that's that higher processing or that higher engagement level for the human to deal with. And, you know, they've turned around millions, but it's not the fact that it's saved them money. It's now they're at a competitive advantage over somebody else because I can get immediate support instead of having to go to the shop next time. And then now that mustard's 1 week older, so even if, you know, I got it and I didn't like, it was the wrong brand or something, that there's like a whole return issue. Anyway, I think it
Yeah,
is.
well, and what I love about that example though is also the fact that the promise of kind of big data, real time analytics, and all these other things that folks have been talking about for a very
Mm,
long time. It's becoming more economically accessible to smaller companies, and it really speaks to this point that there is value if you can find a way to organically group all of your data together. If you have them in
mm,
all these disparate silos, because you have maybe different SaaS vendors, or you just like kind of implemented things in a funky way. There's still ways to connect it. There's all these ETL and other types of services that will kind of move the data around and get it consolidated. But
mm,
at the end of the day, the more you can kind of naturally get this all together, the cheaper it's getting to go make sense of it. So it's not just,
mm,
hey, we reduced the cost of this mustard jar. It's now that we can run semantic analysis on this data set, and we can run all sorts of really
mm,
cheap queries on this data set to say, like, is this really about mustard, or is it this customer segment, or like,
yeah.
and because that would just get lost in the store, if you just went to the cashier and like, hey, I want to return this mustard. You just
Mm,
have some SKU reconciliation you could do at some point,
mm,
but getting more of this in an async self-serve, there could be
mm.
that one question you ask, like, why are you returning it? And while that's very coarse, at scale, that becomes super actionable.
And I think, you know, like sample size matters. You know, a lot of, you're talking about getting your 100, and you're going further and getting your 120. A lot of times people go, oh, I did this happened twice or three times,
Yeah,
so
the
now I'm going to make a
anecdotes.
decision on it. You could have just got a bad set. Or like when doing your automation process, what do you automate? Personally, I have a concept of do it from the inside out. Do it from what you know works. It's the
Hmm.
customers you already have, and it's nurturing them better. It's asking for reviews for people you've already worked with. Then once you've done that, maybe do some early stage, like proactive stuff or outreach, because a lot of times people go, I need more customers, I'm just going to spend a lot of money on ads, but they haven't gone and figure out what do they want. Then how do I then capture it? Where are my audience? And then what kind of ads going to resonate with them, and doing all that testing process. But even that as an automation process, the the more money you spend on automating a crap process, like there's a
Right.
movie that I constantly quote, and it's called Field of Dreams. It's a baseball
Hmm.
movie.
Yeah.
If you build it, they will come.
Yeah.
That is totally the opposite of what you should do when it comes to
Exactly.
investment
Exactly.
in software.
Exactly. And what I believe is the psychology behind that, on why that's so tempting for people, or why it's so attractive for people to believe that,
Mm,
even though I do agree it's a misnomer, is because many times you have expertise of some sort in delivering that service or building that product. And so that's the easy thing. And the idea that your CMO or your head of sales is actually the person that's going to make or break this business is like hard for somebody to get their head wrapped around, but it's like, but that's true. And so either hire somebody world-class, partner with someone world-class, or go build that muscle. But there is no world where you get to make the best product and then your sales motion sucks.
Well, at the end of the day, you're building for your customer and not for yourself.
Yeah.
So they're the ones you got to satisfy. So you can feel great about it. What's the marketing saying is, having no marketing is like weeing yourself in a dark suit. You get a warm feeling, but no one else knows about it.
There you go. I love that.
So what processes make you more deal ready since you're an investor when people are looking for investment?
Yeah, so I love tactics on these types of questions because we could talk very abstract, but like sometimes it's helpful to use real things and people can extrapolate hopefully on maybe something that works for their scenario. But one of the things we've been doing recently is leveraging the Google Workspace API, so for email and calendar. And this sounds very trivial. This is one of these like small ideas where my brain's like, there's probably a product there, but I don't really have the time to go chase this down. But we wrote just a very lightweight set of scripts, and we track responsiveness, right? And we found that like responsiveness matters in these deals, right? And so you don't need a ton of data to kind of do some very crude anomaly detection to kind of say this is outside of the bounds. And we don't use that one data point to like penalize a deal. And when I say we, it's usually myself, my chief of staff, and my business analyst. And so when we are looking at a potential deal, the way it flows is I'm likely actively looking at a space. So I talked about social proof. I'm right now actively looking at businesses that are for sale that are in that space or could be repositioned to that space. And so by the time we actually get a real deal in the pipeline, we're trying to move them as efficiently as possible to a no or a term sheet. And it's like, because I want to respect their time, but at the same time, I don't want to have a bunch of conversations and then it turns out this thing is a dud, or they don't really want to sell, or their price is ridiculous on their, whatever they think their multiple should be. And so we are doing all these little tricks on how responsive are they. What is the quality of their documentation, right? So if we get to a point, there's usually something in a sale that's called a teaser. And so the teaser is like the pre-NDA PowerPoint or doc that says like, hey, we're for sale, but didn't have all the stuff in it. And then if you're like, hey, I think there's enough here, maybe you have a cursory call, either with the broker or with the operator. And then you sign the paper, the NDA. And then from there, what happens is you get access to this data room, and it's going to have bank statements, Stripe access, different things for you to go do some analysis. And again, this sounds very tactical. I just look in that data room, and if I'm like the file names are named all any kind of way, there's like a weird like lack of cadence on the timestamps for when this report they said was their monthly report. Like it doesn't look like it's coming in this. Like I'm looking for the operational consistency, and whether it's how they respond, how quickly they respond, the hygiene of their documents. These are all little small data points that help me figure out, all right, how well run is this? Because those are all moments of attention to detail. So that's like one piece that sounds kind of silly, but so many times I meet great personalities and it's just an operational mess. And it's like, all right, like you could probably make it work. But for me, I'm just not interested in the turnaround, because that means you got to convince all the people who work there to become quality writers. You got to convince them to have some, kind of up their digital literacy and kind of use these tools at a higher level. And like, that's a fairly heavy lift on the training and culture side that I'm usually not interested in. So that's one example of something that's very tactical, but it's very telling in kind of a very trivial way.
No, I like that. I like the being able to up their sort of technical skills and digital literacy. I think that's a severely underrated thing. And I think once you can really nail that, it has so much value, because, one person can punch the weight of 10, and they can, writing documents, documentation, I'm huge on. It's even on my little Teams message to say, do and document. We are nothing without our process documentation. And every time we do write a document, I like we started really pushing on it at a certain point, and the amount of calls I got every 5 minutes, or how do I do this, or how do I do that, just went away to nothing. And to the point where I'm like calling them up and going, is everything all right? And they're like, yeah, I got it. I'm all on top of everything. And you get the numbers, you get the stats. And now it's just fun to talk to your people instead of like, oh, why haven't you done this yet? And haven't you done that yet? And can you do this? And like you build better relationships. It's ridiculous.
Yeah, and just a quick sidebar on that. Years ago, I owned a failed salad shop. So I was in I attempted to be in the food and beverages. That's a hard business, and we failed horribly. One of my proudest moments is the Yelp clipping that I took that says "Fine Salads." That was the name of the business, and it says "permanently closed," because it taught me so many things about kind of how to tackle this. But one of those principles was, to do it properly. To even keep that business open, we had to be really extreme with the SOPs, right? The standard operating procedures. And it's like, the salad dressing is going to go bad if we don't do this. And when this happens with the lettuce, you have to document all of these things. Yeah. And when you see very simple businesses, you see this hyper structured process. And even though that business didn't work, I kind of transitioned and translated that back to how I think about running software companies. And it was super transformative, because it's not like there's some big government bureaucratic planning process. It's just that if you have something in your brain, think it through, write it down, share it async, and find times on the schedules to come together and have discussions. And that is the motion that I found to be a very consistent way to get some of the benefits of these other businesses. And you see why those businesses have to go run that way, because they have very thin margins. So they have to be hyper, operationally efficient. And so if you have a high margin business where you apply that type of efficacy, there's just all sorts of goodness that comes out of it.
Yeah, I think in terms of, it's not quite management by committee, but like having like you said, that you think about it, you write it down, you share it, and asynchronously, and then coming together, and then having like a mini board meeting where you kind of go through an agenda. One thing I found very quickly when, pushing all knowledge articles out into the world, is that I have a lot of assumed knowledge. And I know things in my vernacular and the way that I think they should be done. But when I share it to the team and they're like, I don't understand this. Okay, well, give me the feedback, write it on the form. Everything is a pipeline, including your knowledge articles, including your investment deal flow, including your hiring pipeline, and going through those sort of stages makes it really easy to basically handle high volume, provided and using those techniques and tools. So it doesn't matter.
What I love what you're saying there. Quickly, I was going to say there's also some modeling behavior, right? When I worked at Microsoft back in the day, we had this leadership framework that was called Model Coach Care. And the goal is you model behavior, you give people coaching in context, so you don't tell them 3 months later that they're doing something maybe they shouldn't, and then you do it with empathy, right? And that was the gist of the framework. But on the model piece, when you write these things down, people are like, oh, I'm supposed to write these things down, right? And I have a folder that we share with everybody across the teams, just called CAGR memos, and it's me just writing things, and they're kind of clustered in two buckets. Like I really spent some time thinking about this, and these are in one folder, and then other things is like, I had 2 hours and I was just writing. So this may not be final thought, or I might need more data to really get to conviction. But it's really powerful because I'll get links, and I never told anyone like, this is how we should structure our memos. I'll get links, and it's like, hey, this is what I'm thinking on this ed tech thing that you wanted me to look in. And it's just following the pattern, right? And so much of this is just modeling the behavior that you want others to do. And if it's coming from a genuine place, I think most folks, they want that type of direction while still having the autonomy to kind of fill in the lines themselves.
And it could be like modeling and being that sort of leadership stuff is it's a lot of hard work. I mean, I don't have a really good analysis for this, or analogy, sorry, other than a story. So also, we both got a veteran background. I was in the Army infantry, and we were doing a jungle warfare training in Malaysia. And so we had this like assault. So we had to assault the position on the hill. And so we had support fire from one direction, and then we were the flanking force to come around on a 90-degree angle and then assault through to the position. Anyway, our flanking force had to go through a marsh with like grass higher than me. and it was really thick and really wet. And I had all my pack and my webbing and my rifle, and then we couldn't get through it. So what I had to do is I had to throw my body onto the grass, crush it down one body length, stand up, run forward, do it again. And I had to do that for a good 100 meters.
Wow.
And the amount of effort and work, but that created a path for everybody else. Everybody else was just casually walking behind going, what's taking so long? But our team, we were the lead force, and we were just like absolutely shattered after that. And then the others came through. But
question for you. Oh, go ahead.
I was going to say, we laid down a path and we made it. And I feel like sometimes doing that is necessary in business. Like that's what it feels like as a business owner.
100%. I was going to ask a question to you. Have you found that people who, have some type of service background, or maybe people who play professional sports, or like, I've tried to put my finger on what it is. Is it like team-based systems? Is it performance-based, kind of work? Like, I don't know the right articulation, but have you seen certain patterns from certain groups, like folks who have formerly served, that translate well to business?
Oh, absolutely. So we do a lot of work with veterans and veteran-owned businesses. And I find that not only do you sort of click on the relationship side, because you kind of have like, I guess, a shared trauma or whatever, but you can kind of relate to, the systems, the structure, the processes, and it's like you have that shared vernacular or that shared concept of what, how to run a big organization. There's a lot of moving parts in the military.
Yeah, there it is.
They've been doing it for hundreds of years, so it's not like they've kind of just fallen into some unknown management structure. This is how you move assets and people in unknown places, in dangerous situations. So it's an excellent building block for teamwork, for understanding hierarchy, for understanding what an org chart is, which is your battalion map, and then understanding discipline and turning up on time and all the little bits. Like there's a performer for orders. I like there's an acronym we have, it's SMEAC. And pretty much we write everything like that. And we've got several veteran people that work with us. And I can just dot point out something and know exactly what to do, when, how, who, and the concept of left and right of arc or mission command. So when you're doing things and you're the central point of failure, the business can't scale. But mission command is, what the US and what the Australian generally do, whereas central command's more like Russia, China, Soviet bloc era. And by giving localized control, you can say, this is the outcome. This is the target end state that we want to happen. These are the resources you have. This is what you can't do. But anywhere outside or within that space, go at it. And they can come out with some amazing work. And that, as a concept, is management.
100%. I love that. Yeah, that's a great way to concisely put all of that.
Yeah, you're just giving a direction and a strategy and saying, go for it.
Yeah, I love it. Yeah, and I love that you could concisely articulate it too, because it helps, I think, maybe folks who are previously served kind of, if they hear this portion, they can kind of see like, oh, I do have this highly valuable skill set that can translate to this other space. And many times I'm looking for, these populations that don't always, get the articulation of like, no, you're super valuable over here if this is something that's interesting to you.
Yes, absolutely. Now, I do have another question for you. So what are the processes that make you more deal ready when you're looking for investment?
Yeah, so this is kind of the reverse of the previous question. So, what do I look for? As I said, there's a bunch of simple financial exercises that you can do. You can also get on a call, and if you have some decent EQ and interpersonal skills, you can assess the team pretty quickly. So those are the easy ones, and then you have to do all this other digging. But on the flip side, I think it's some of the similar pieces. The first point I would say is ask yourself, why do you want to sell your business? And so for anyone who is at a stage where maybe they're burnt out, maybe there's a family reason where you have to relocate to another place, and it's a regional or localized business. Maybe you're aging out of the space. There's all sorts of reasons where someone might want to sell a good business, right? And so that's the first question: like, do you have a good business? So assuming those those things are true, you have a good business, and you want to sell for the right reasons. One of the first things I try to have folks tackle is, do you have anything that makes your business great that goes away when you go away? And there's two parts of that. There's the first one that's pretty obvious to anyone who's looked at deals. There's something called SDE, or seller discretionary earnings. And this is the dollars that you add back into the cash flow of a business, or you deduct from the business, because the operator, the owner, was doing all that work and not paying themselves, right? And so that's a really important piece of math. And that's pretty standard. It can sometimes be this thing where you feel like you want to go to arbitration. So typically what you do is you go hire a CPA and you pay them for a day's worth of work, and they go figure out the math using comps and other things. And that way, I don't discount on my side and they don't mark up on the seller side. But so you can get that piece. But the other part that's a little trickier is there are many times certain types of certifications or classifications or something specific to the operator that is part of the sales pipeline that's really hard to financially model. So we're just talking about veterans. Let's say you own some type of company and a veteran was, his veteran status, and they were using that to go get more deals with the local government or what have you. Well, who are you going to sell it to? Like somebody who also is a veteran? Like you just collapsed your market in a crazy way. And it's not always obvious in discovery initially. I've learned, like, I have a list of things that I go through, and I'm like, if I see any of these flags, I'm like, yeah, this is probably not something that we can double click on, because there's some magic sauce kind of baked into the operator / owner. So first is just kind of seeing if there's anything that makes you special, you the human special, that is going to discount. And I found there is no benefit trying to kind of hold back and committing lies of omission. It's just like put all the dirty laundry up there and get to the no as quickly as possible, because anyone who has a well-run system, this is somebody tiny like my little company that does micro PE, all the way up to big players like KKR and Apollo and Cargill and what have you. Like, the process is the same. You don't want to be wasting your operational time on a bunch of what are effectively sales calls with people who are trying to buy your company. And so get all your business out up front quickly. Get your financials cleaned up quickly. And by that, I mean, like, obviously, if you haven't paid taxes or whatever, do all that. But what I'm specifically talking about is, like, are your bank statements all organized? Are all of your tax filings organized? Are they all in like a way that you could zip these things up and drop them in a folder? Or is it like, oh no, I got to talk to Barbara and then she has to? Don't do that stuff when you're ready to sell. It's just like selling your house, right? You like, go get all the little knickknacks fixed before. And so those are some of the pieces. And then through that process, what I find is sometimes people are like, oh, I don't want to sell, or I'm not ready to sell. And being very practical on what the multiple is on your industry, that's something you should do months before you're ready to sell, so you don't have the emotional shock. So you might think my business is worth 2 times revenue. Nobody in private equity is going to buy off of revenue. Now, if you are selling to a strategic, so maybe there's a company that needs what your company does, sometimes they have to overpay, and they will sometimes buy on a multiple of revenue. But typically, you're selling on a multiple of cash flow. And again, if you don't know what your multiple is, you can reach out to a business broker. Usually they'll give this information for free that says, hey, I have a business. It's doing $15 million a year in top line revenue, and it does $3 million in EBITDA or cash flow. And I'm in this industry. What do you think is the ballpark range for this exit? And if you hear a number that's just like, man, I'm worth way more than that, like maybe you're not ready to sell. Last thing I would say there is make sure that for whatever story or narrative you're telling, there's not a bunch of forward-looking events that need to be true, because unlike selling a startup, let's say a startup's raising capital from a venture fund, it's all about the story and the narrative. But if you just have a regular bread and butter business, it's all about what you've already done. And so you can't say, hey, in the next 6 months, this whole thing's going to hockey stick, so you should give us, extra 1x on our cash flow. It doesn't
Yeah.
work like that when you're selling to private sources. So these are like, I'm just kind of hopping in on some very specific things, but you'll
Mm,
see the general theme here is make sure you're emotionally ready and make sure you have the tactical hygiene in place. And
mm,
then that's going to allow you on the seller side to quickly get to a point that says, do I even want to sell this? Like, will they even be a good steward of this asset that I've created? For some
mm,
older folks or people who have really put blood, sweat, and tears into it, they don't want to sell to certain types of companies. And so
mm,
you want to go figure out, like, why do you guys want to buy this? It's just a roll up strategy, squeeze out the dollars. Do you want to keep these jobs? Are you going to fire my people? So these are also things that you can kind of work into the flow. But as you can see, if you think about the stress that could come with selling a house or something like that,
mm,
the more you can get the house ready and do all of the transactional and logistics stuff before you
mm,
have to go through that emotional stage, like the better. And a
mm.
business is no different.
Yeah, yeah. I think in terms of getting people to sell a business, I mean, there's a lot of times by the time, like, this is why you need to get in early because a lot of times by the time they get to the broker sold them some story of how they're going to sell and how much they're going to get, and because the broker wants to increase their commissions, and then
Oh, and
in
the
their
broker
mind
will
they've
have
already,
them shut it down. I've seen that happen twice
yeah,
where
right,
the broker told some crazy story. I was like, no way this business is, and like one of them, we had a side conversation with the
mm,
owner. And I was like, listen, we already sent you guys our term sheet. I don't need you to sign it. I'm not going to try to have a weird side conversation where I need you to go skip your broker, but
mm,
we're not moving that number. And so as you guys get out there, if you want to come back in a few months, as you take a look at
mm,
things, let me know. And he was quite nice. I was trying to buy a roof repairing company, and you know, I check back in every once in a while, and he's like, "Yeah, no, everything's good." And it was like clear, like it's like, all right, not really the time to engage. And then I reached out and I was like, "Hey, what's going on? Maybe it's time we could catch up." And he said, "Yeah, we're shutting the business down." And I was like, "What happened here?" Right? And they had putting a bunch of things in motion, and kind of the structure of the business fell apart. Some key folks left. Like it just kind of like
mm.
unraveled because like psychologically he had made up in his mind that he was done with the business, and so he wasn't running the business properly. And yeah, he got a goose egg. Like it went to zero.
Yeah, wow, wow.
Just crazy.
I mean, I have a concept of you can't bank on good intentions. Like, everybody goes, yes,
Yeah,
yes. They're like the preacher. They're like, we can do it. This is going to happen. They're like trying to
yeah.
lead the people, and then it all falls apart. So you've really got to be very careful. So I guess the last one is less of a question. I guess more of a call to action. But going out and assessing your development process. We did get some comments earlier about process studies being good, and definitely wanting to define your processes. So I just thought I'd pop in some of those before we leave towards the end of this. But in terms of going out and assessing current customer development process now, what are the three things you want to leave, I guess, our listeners with on what they can do?
Yeah, well, this is something that I was exposed to when I was very young, but I didn't take it to heart until much later. And the number one thing is really allow yourself to fall in love with what the customer wants from you and not the
Mm,
thing you've dreamed up in your head. And I know that's a mindset thing, but like that is so critical because that lets you get to number two, which is really embrace this idea of not just having process, but really tying it back to everything you do. So if you state your long-term company goals, your annual goals, your quarterly goals, your weekly rhythm, all these things should be connected to the experiments you're running, and you're letting that lead. And the goal should be to go solve what the customer wants, not what you're trying to manifest in the world. You're not a film director trying to make a movie, and you're like, everyone will watch this 2 hours of content. You really need to go, get folks on board. And then the last thing is rethink what you mean by moving fast. I used to say move fast to people, and it didn't dawn on me that I had come from a background that was moving at a different pace. And what I like to tell folks now is, big companies move in months and years, medium-sized companies move in weeks. And if you're a small company trying to use size to your advantage, you need to move in hours. And if that's not the pace at which you're moving, you can break your problems down to smaller problems. There's all sorts of ways to go tackle that without stressing yourself out, but you're probably not moving fast enough. And if you connect these all together, you have, you're building what the customer wants, not what you want. You're really tying process back to the goals to measure that as successful. And you're breaking down these processes small enough where you can run experiments and iterate your way to success. You will create a flywheel that's going to compound, and that's going to allow you to get your business as big as you would like. You might hit some other hurdles where you have talent gaps and you need to get good at hiring great people and all those types of things, but the flywheel will absolutely compound if you can get those three things right.
It's almost like the software development cycle, agile method being overlaid onto a business.
100%. Like, I don't care if you say like, well, LaSean, I run a large scale commercial janitorial company. Yes. Okay. Like nothing changes right now.
Same.
You might not be iterating and this is probably the whole conversation. It's a good way to kind of sum a lot of this up. You might not be innovating on the product, right? Or even your business model. Like maybe you are in an industry where that's tried and true. But you can still keep getting that 1% a day improvement on your go-to-market and your process, right? And like those things, like, can you increase the quality of service? Can you increase and deliver things faster? Like there's all sorts of things where, if we use the janitorial service, like you can clean this building faster, you can clean a different type of building. You figure out a system as like, oh, now we can do these windows. Like there's always a way to keep pulling at the thread to say like, what does the customer want to pay to solve? What process can we put to do to, solve that repeatedly? And then, like, how can we iterate and experiment our way to making that process more efficient? Like that is the combo, regardless of industry. The asterisk is, there are certain regulated industries, maybe law or medicine, that I can't speak to, so I'm not an expert there. But the vast majority of businesses, this will apply.
I guess, like, just to give people some ideas on some of those other elements, like you could create a process to have your day sales outstanding reduced by a little bit, or maybe you can find a way to make it quicker to hire because you've got some templates, or onboarding better people. And then, those micro improvements that relate to creating a better service and creating the better outcome, but it's not changing the service directly. Yeah,
exactly.
You still clean the mirror like this, like.
Yeah. And
cool.
Last thing I'll underscore there is, the culture and the vibe of your employees, it matter. And when you deliver a better onboarding experience, they see you're actually living your values. Like all of those things also compound into them delivering a higher quality service or better customer engagement. And so while those may feel like extra intangibles, those count too over time. And so they're not just the math numbers up front reasons to go do this, but there's also, the longevity of your talent. If you are getting, if you're turning over your talent every 2-3 years, like that's super dangerous, because you're now basically building a new company every 2 or 3 years. And so a lot of this is also about how do you keep the right people engaged on some type of shared mission.
Yeah, absolutely. Well, thank you so much. Like, we've covered a lot here, and I really appreciate you coming along. So if you've been listening and you like what you hear, you can check more about LaSean and CAGR or CAGR.com at the website, or you can check him out at LaSean Smith on LinkedIn. He's quite big over there, so make sure you check out some of the posts. If you've been watching live and you've liked something that you've seen, or if you want to come back and listen to it again, once the live is finished, you'll be able to find the links on those social channels where you can replay it back. And if you've been listening to the podcast, you want to perhaps be on the podcast, or you want to listen to some other episodes, you can check us out at relevate.com.au. And if you want to get any more tips and tricks, you can always join us in the community at community.relevate.com.au. But in any case, it's been great having you on. Thank you so much for coming along. And for those listening, take care.